Hi, this is Dylan. Welcome to my daily trading analysis video. Today is Monday, 5th of January. So let's start off with the euro against the US dollar. Over the weekend, the euro has fell all the way to as low as 1.1845, which is even lower than it is in June 2010. Right, so what happened is that first is that the Greece political parties has embarked on a campaign of elections, and that might determine the fates that the country might exit the eurozone, which will cause a fall in demand for the euro and weaken the euro further. And secondly is that Draghi is getting a step closer to quantitative easing, um, both based on the Greek political situation as well as fighting the risk of deflation. Alright, so back to the chart itself. On the daily chart, based on Fibonacci expansion from the top to this area, we are seeing that price may fall even further to 1.1579. Alright, and zooming into the 4-hourly chart, there was previously a falling trend channel, and price has clearly broke below the bottom of the falling trend channel, got supported as it touches the Fibonacci expansion level 141.4%, the price of 1.1887. We see a very strong pullback over here, and hopefully we can see a further retracement so that we can go for the short opportunity. Alright, so we are waiting for price to retrace, and hopefully it touches the bottom of the previous falling trend channel, and to see if there's a setup to go for the shorts. If not, we can always plot a Fibonacci retracement. Alright, so if it breaks above this level, then we can look at the retracement level of 30.2%, price of 1.2125. We look for the short as well. So as for the downside, we are looking at the final exhaustion level based on the day charts, day one charts, at the price of 1.1579. Of course, if price begins to retrace, we can again plot the Fibonacci expansion from the top to the bottom to see what the other levels beside the lowest over here at 1.1579. Okay, so that is for the euro against the US dollar. Next, we have the New Zealand dollar against the US dollar. Alright, let's zoom into the 4-hourly chart. So price has fell and touches the final exhaustion level for the second time at the price of 0.7620, final exhaustion level 161.8%. And right now we are seeing the price has been supported and is about to rebound from here. So this could be a signal for the long opportunity to trade the retracement. So we are waiting for the setup over here in either the 4-hourly chart or the 1-hourly chart. And if price were to break below this support level we are looking at is 0.7576. And if it falls further, price may even touch the bottom of the channel itself. Alright, so that's for the New Zealand dollar against the US dollar. Next, we have the pound against the US dollar. Pound has fell pretty much as well due to disappointing manufacturing data, which signals weakness in the UK itself, partially due to the a weakening demand in the eurozone. And based on the chart itself, there is a falling trend channel. Price has touches the bottom, and there was a very strong pullback, and we are actually waiting for price to retrace further to see if there's another chance to go for the shorts for pound against the US dollar. And based on day one chart itself, with Fibonacci expansion from this area to this area, we are seeing that the final exhaustion level is the price of 1.5057, and price has yet to touch a level, so this could be the very first level we are looking at if price were to fall even further. Right, so over here we'll just be waiting for retracement. We can plot the Fibonacci retracement from the top to the bottom over here, and this will be the few levels we are looking at. Firstly, the retracement level of 30.2%, price of 1.5382, and followed by the 61.8%, retracement level of 1.5535. This could be a better resistance level. As you can see, price has been supported at this level previously, and that is also near to the top of the falling trend channel. Right, so that's for the pound against US dollar. Next, we have the Aussie against the US dollar. This is a 4-hourly chart. As we can see, the price has already broken below a probable falling previous falling trend channel. Price got resisted again at the bottom of the previous falling trend channel, and right now price is beginning to fall further, but price has yet to reach any of the exhaustion level, whereby the first one would be at the price of 0.7929, which is based on the weekly charts. Right, so zooming into the 1-hourly charts, we are still expecting price to fall further. And if we zoom into the 15-minute charts, we can actually wait for a intraday short as the price retrace back to the 55 moving average, right? Because based on the pattern itself, we are seeing that the 55 moving average has been a pretty strong resistance in the 15-minute charts, thereby giving an opportunity to short in the 15-minute charts for intraday shorts. All right. So that's for the Australian dollar against US dollar. Next, we have the dollar against Japanese yen. Price was pretty much unchanged. I said that it has appreciated a little bit. So right now in the 15-minute charts, we are seeing that there is a consolidation over here. In the 4-hourly charts, price is seen kind of broken above the falling trend channel over here. So right now we're just going to shift it and to see if it's able to break above. But however, if price begin to fall, there is a possibility that price may fall even further, and a probable symmetrical triangle might form over here. Based on history or based on past record, is that the dollar yen after appreciating for a period of time may always fall back into symmetrical triangle formation before we see another breakout for price to appreciate further. Alright, so over at this area, there could be a opportunity to go for the shorts, or if not, we'll just wait for price to fall further and wait for the long opportunity. Right, next we have the dollar against the Swiss franc. Right, so there was previously a rising trend channel. Price has clearly broken above the top of the rising trend channel, and similarly due to the geopolitical crisis in the Eurozone, as well as the indication by the European Central Bank to begin a government bond purchase program, we are seeing that price has appreciated, almost touching the final exhaustion level at 1.0302, and there was a very strong pullback. Believe that there is a lot of profit taking over at this level. So right now we are waiting for price to retrace back to the top of the previous rising trend channel as a support level to go for a long. Right, and on the upside, of course, we're waiting for price. We are expecting price to appreciate further back to the previous high, or rather the final exhaustion level, the price of 4.0302. And if not, we can always plot the Fibonacci retracement from the bottom to the top. Okay, first level we have is at a retracement level of 30.2%, price of 1.0010, followed by retracement level of 61.8%, price of 0.8835. Right, last but not least, I would like to touch on Australian dollar against New Zealand dollar. First, let's take a look at the monthly charts. price has definitely reached the low, reached a low of a huge range in the monthly charts, and we are finally seeing price beginning to rebound. So zooming into weekly charts, right, we also seeing price is beginning to rebound from the final exhaustion level, the price of 1.0415. Zoom in a little more in the day one chart, there is already a reversal candle and price is beginning to rebound. So what we would like to wait here is that wait for retracements as the price continues to appreciate to find a better price to go for long. Right, so that's for the Australia against New Zealand dollar, and with that I have come to the end of today's trading analysis video. So thank you for watching, and I'll see you again.